Fourth session, Boosting Financial Inclusion Through Digital Financial Literacy. Please welcome the panelist, Elizabeth Kelleher Dwyer, Superintendent, Rhode Island Department of Business Regulation, Insurance Division of National Association of Insurance Commissioner, NAIC. Apriliani Siregar, Director and Chief Legal and Compliance Officer, Manulife Indonesia. Connor Donaldson, Chief Executive Officer, Global Asia Insurance Partnership, GAIP. And the moderator for this session, Yuda Wirawan, Indonesia Life Insurance Association.
Wow. Hello. Good evening, everyone. I think I'm gonna stand up. Okay, I see quite a few still saying in this session. Hello. Good evening, everyone. I think before I'm starting to start the sessions, probably after these sessions next year, I would push the committees to make all the participants staying here before they can get the points. They have to register during the morning sessions, and they must register during the end of the sessions. And they just get the point. Either way, they won't get any points. Are we agree on that one? So thank you, everyone. Please give a warm applause for you all first, for all the participants still staying here on the last sessions, and of course for our panelists. Okay, so my name is Yuda, representing Indonesia Life Insurance Associations, AAJI. Will try to lead these 4 sessions with a very, very interesting topic, boosting financial inclusion through digital financial literacy. Anyway, I would love to also share, is there any friends that we have in the room from OJK? Do we have friends from OJK here? No? Because we've been talking about you before the sessions. So hopefully that's okay, Pak Budi ya? Okay ya? Let's talk about how important our regulators' friends to becoming more, having more deeper relationship with us from the industry. So there is no OJK here. Are we safe? Safe, yeah. Please don't fire me. My boss here as well. Please don't fire me after this one, yeah. All right. So I believe all of us here are obligated to promote financial insurance literacy and inclusions, and tomorrow, 18th of October, will be our big day where insurance companies celebrate Insurance Days. Please, a big round of applause for all of us in the insurance industry. Tomorrow we're celebrating Insurance Day. However, whenever we celebrate the Insurance Day, some sad facts come out. Can we have one slides before some key facts? Do I have my slides here? The moderator slides? Okay. Oh, okay, there is it. So, based on release from Indonesia Deposit Insurance Corporations, IDIC, or in Indonesia we call it as LPS, Lembaga Penjamin Simpanan, on 27 September 22, they mentioned only 49% of Indonesian adults have access to formal bank accounts. Can you imagine? There are 51% of Indonesian adults, LPS mentions, this is LPS, yeah, still putting their money under the pillows, still putting their money in their homes, still putting their money in any other informal banking institutions or financial institutions. This is sad facts. Yeah, that's just my saying. And another data released by AAJI, by Q4 2021, the penetrations of private individual life insurance penetration was only 7.5%. How many years have life insurance industry formed in Indonesia? More than 100 years, ladies and gentlemen. More than 100 years, and the penetrations of life insurance in Indonesia is less than 10% still. Compared to GDP, Okay, the global economy report stated that Indonesia life insurance contribution was only 1.117%, compared to Malaysia with 2.45%, Thailand 3.63%, Singapore 5.94%. And how many in Hong Kong? 16.91%. I do not, put Hong Kong here because the Indonesian is getting lower. If I put Hong Kong here, Indonesia is getting, where is it Indonesia? Well, Hong Kong is 16, then I don't put Hong Kong in here. So it's quite sad facts. However, on the sides, which is your right-hand side, it's contrary with digital penetrations. Based on Hootsuite, we are social data. In 2021 alone, we have 125.6% of mobile phones. Means that one Indonesians have more than 2 phones. I don't know for what. Okay? Have more than 2 phones. Is there anyone here from Indonesians having more than 2 phones? Do you bring more than 2 phones? Please raise your hands. Raise your hands who have more than 2 phones. Oh, you have. Okay, thank you. Why? The question is why. All right. Thank you, Bu. Thank you. Very honest. 73.7% penetration of internet users. 64.8% penetration of smartphones. 61.7% of social media users. Means many Indonesians love to gossips instead of having insurance, because they've been having more access to social media, Instagram, TikTok, blah, 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 dancing and whatever, rather than having an insurance, okay? Well, with these key facts combined, the question is now, is contrary, right? Then how? Is there any way that the digital can, plays a critical role in boosting these financial inclusions? Now let's give a warm welcome to our panelists on these sessions. We have Elizabeth Kelleher-Dwyer, Superintendent, Rhode Island Department of Business Regulations, Insurance Divisions of National Association of Insurance Commissioners, NAIC. Big round of applause for her. Apriliani Siregar, Director and Chief Legal and Compliance Officer, PT Ajem Manulife Indonesia, Asuransi Jiwa Manulife Indonesia. A big round of applause for Apriliani. And Connor Donaldson, CEO, Global Asia Insurance Partnerships, GAIP. This is where I would love to speak about OJK later with him. All right, first, I would like to invite Beth, right? Yes. Beth, to share your thoughts, your insights on these sessions. Well, just a bit background about her, that she holds a law degree from Pepperdine University School of Law and holds the designations of Chartered Life Underwriter. She has 30 plus years experience in financial services. She is Superintendent, Rhode Island Department of Business Regulations, Insurance Divisions of National Associations of Insurance Commissioners, NAIC. So it's like OJK in US. So let's hear from her standpoints about US markets and how the regulations playing an active roles. Okay, without further ado, I would like to give Beth your time to share your thoughts and insight in boosting financial inclusion to digital financial literacy. Beth, over to you.
Thank you. Is this working?
Yes, of course it's working. Hello.
Okay.
Okay, good. Thank you.
So before I tell you about the US market, I thought I would try to explain what the National Association of Insurance Commissioners is. This picture here is our last meeting, and that's most of, or many of, the insurance commissioners in the United States. The NAIC has existed for over 150 years in the United States, and it's essentially the collection of the 56 jurisdictions that regulate insurance. How do I advance this slide? Do you know?
The slide, the clicker?
There, okay. So what we have in the United States is a national system of state-based regulation. That is not the way any other financial service product is regulated in the United States. It just developed this way, and it works very well, so we continue to keep it this way. But we have 56 member jurisdictions, that's the 50 states, plus Washington, D.C., and 5 territories. And we are all members of the NAIC. So the NAIC kind of operates as a trade organization of the states. So what does that let us do? Well, it lets us coordinate on common issues and keep our own regulation on specific state issues. And it actually works very well. For instance, the financial standards of insurance companies are the same in every state. We come together through the NAIC, and by we I mean myself and my staff and the commissioner and staff from every other jurisdiction, all 56, and we actually develop the financial standards, and then we require ourselves to adopt them. So I rely on another state that might have an insurance company domiciled in their state for their financial exam, and they rely on me. But we all know that we're all following the same criteria, and we actually test ourselves. So we have something called accreditation, where we send a team in and they look at your financial regulation and they determine that it is of such a nature that other states could rely upon it. The other things that we coordinate on very specific, on life insurance tends to be very, very similar throughout the United States. So we actually have a compact, it's called the Insurance Regulation Life Insurance Compact, that an insurer can file with that compact, and 46 states will accept the judgment on that particular product. There are 5 or 6 states, they tend to be our larger states, California, New York, Florida, that do not participate. But this allows us to coordinate on the national issues, but when it comes to a state-specific issue, have our own regulations. So for example, I'm from the Atlantic coast. We have hurricane risk. We're very interested in hurricanes and regulating hurricanes, but the people in the Midwest and in California are not that interested. In the Midwest, there's a lot of tornadoes. They focus on that. Unfortunately, California and our West Coast has really been hit by a lot of wildfire risk. So this system allows us to both have the solvency nationally, but the ability to focus on our state-specific issues. So I am not able to advance these slides. I don't know why, but could you please advance the slide? So as I said, we act as a central gathering point. So if there's a disaster in the United States that affects 5 or 6 states, we use the NAIC, which has staff, to gather data for us, rather than each individual state going out and gathering data. We work on issues such as, that are common to all of us. So the big issue that we're discussing in this panel is insurtech, artificial intelligence, machine learning. We actually, at the NAIC, established a new major committee. Oh, did I just have the wrong one? Okay, let's see if I can do it this time. So we established a new major committee on those issues, cybersecurity, innovation. We see that as the future. I think we all do. We all know that. And we've actually established a major committee on it, which is a big deal for the NAIC. We don't establish major committees that often. We do draft model acts that each of our jurisdictions will accept, and we are now looking at some of those to make sure that they make sense in the modern era. And we provide coordination across jurisdictions, as I mentioned. I think I just don't know how to, oh, there it is, okay. So as far as the US, I thought I'd just give you a couple data points about the US life market. So this chart shows you that in 1998, we had about 52% penetration for term insurance with limits at 60,000. 2019, which is our last year I had data for, it's gone down a little bit to 48%, but the limits are a little higher at 110. Cash value insurance also going down 30%, and now we're at 20. But what's going up is annuities. So the penetration throughout the market really isn't changing that much, but the combination, what people are choosing is. This includes individuals who have employer-based life insurance, individual life insurance, and a combination of both. The overall penetration in the United States in terms of life insurance and annuities was 63% in 2011. It's been pretty stable for the last 10 years. It had come down from that amount between 50 and 55. There is, however, a coverage gap, and the pandemic really emphasized that for people. We're estimating it to be about 16% now, the difference between what people have and what they think they should have. In a recent poll after the pandemic, people are actually reporting that they believe that they need more insurance. We've also done some market surveys where customers indicate that they don't want to receive ads for life insurance during their social media, but they do want to use social media to find out about the life insurance. Online applications are getting more and more popular, especially with young consumers. And we are actually seeing a lot of accelerated underwriting through online applications, usually applicable to younger people. So the revenue in the United States, this just gives you a general idea. 2017, this is again life insurance and annuity premium, $137 billion. The only time that went down was in 2020, and I don't accept that 2020 was normal for any of us at any time. You'll see that we rebounded from the pandemic the year following it started to 159.5. That is life insurance and annuities, and as I said before, year over year, annuities are receiving a larger share of revenues. So U.S. supervisors are concerned about people who are set to retire that might be unprepared to manage their assets. I mentioned a little earlier that annuity share is going up. A lot of people in the United States set aside funds in a tax-preferred account as they're working. And many insurers are offering products to annuitize that into an income stream over their retirement. Life insurers are developing a number of products to assist with this and are trying to get them out to the group that's retiring. The baby boomers in the United States, which started in 1945 and end on birth date 1963, are just retiring. So this is the time where we're really going to test whether or not we have the products that consumers need. We also have long-term care risk in the United States. There was some policies on this, and this is your activities of daily living, elderly people who cannot take care of themselves. Some consumers understand the risk. It's a huge percentage in the United States that are going to need this care, and a very small percentage that have insurance to provide for it. So how do we provide the education necessary for individuals to evaluate their own risk and understand the products? That is an open question, but some of the things that we're doing is individual states are requiring financial literacy in public school curriculums. My own state did so last year. This requires a public high school to actually teach things about banking and checking and how you handle money. We would love to see more about insurance. I think insurance is extremely confusing to consumers because they don't get that basic understanding of, they understand a term policy possibly, but not all the other products out there. The NAIC, which is kind of our trade organization, they actually their staff prepare publications that we can use as individual states. So, for instance, if the NAIC prepared a lot of stuff on flood and hurricane, I would take that, brand it with my own agency, but I probably wouldn't do it with fire risk because we just don't have that fire risk. So the stuff that the NAIC creates as a state, you can utilize or not utilize, but it's all out there under the NAIC. It's branded by the NAIC as well. So they have a program called Insure You, Get Smart About Insurance, which is public educations. Some content is specific to risk, other is specific to things like retirement. So what are we doing about financial literacy? We're doing a lot of work about how new technologies are coming forward. One of the things with being a very old regulator, and by old I mean, we've been around for quite some time, is a lot of our model laws and regulations have things built into them that don't work in this new modern age, so we're looking at all of that. We also work through the NAIC committees to address digital literacy, and I put a couple of examples here. Very quickly, because I'm out of time, we've also we have a special committee on race and insurance, which is analyzing data on disadvantaged populations and how to reach them. We're also looking at algorithms that are being used by insurers these days and trying to determine whether or not there's an improper bias. We also formed a foundation in April of 2022 to encourage young people to join insurance and get insurance careers. This is going to provide some financial support. And we have ongoing data collections on how to build expertise and audit algorithms. So that's a very high level, but I'll turn it over to the next speaker.
All right, thank you, Beth. Please give a big warm welcome to Beth. Thank you for, I think it's a very rare opportunity for us to really learn from regulators, supervisory board from US. She flew directly from US. It took 24 hours, right, Beth?
24 hours and I get 24 hours back.
Wow. 24 hours went back to Indonesia, and she also have to go back 24 hours to. Okay, again, please a big warm applause to Beth. Flew around to here just to share her insights about how US regulatory works. And all right, before going to the next sessions, I would like to remind to all the participants that I think for this last sessions, I would rather not to use any Slido. So I just would love every one of you to ask to share your thoughts, and directly we can have a more discussion session instead of using the Slido. So we can be more engaging for you to learn from these gentlemen here and these ladies here. So then we can have more bouncing thoughts and comments. All right. Now, let's go to the next panelist, second panelist, Apriliani Siregar, Director and Chief Legal and Compliance Officer, Manulife Indonesia. Short bio about her, that she holds a law degree from University of Indonesia and have more than 25 years experiences as professional lawyer and financial insurance. She's also the Director and Chief Legal Compliance Officer of Manulife Indonesia. And now, without further ado, please give a warm welcome for Apriliani Siregar to share her thoughts and insights about boosting financial inclusions through digital financial literacy.
Thank you. Okay, it's wonderful to be here, seeing all the familiar faces today. So, before I start, let me pose one question to all of you, but you do not need to answer it to me, or you do not need to share it to person sit next to you, because it's quite of a private questions. Just keep it for yourself, okay? Okay, so this is the question. If you lose your income today, how long can you survive and maintain your lifestyle without borrowing money from others? 1 to 2 months, 3 to 6 months, more than 6 months, or you do not know? Okay? All set? Keep it for yourself. I'm gonna share an insight later on at the end of my presentation. So, let me share this story first. So, you know this image, September 11 Museum. So, this is a story from our regional leader. He worked in New York in one of life insurance companies who provide group life insurance to employees who work in WTC. And when 9/11 incident happened, they set up a base camp near to the ground zero, and they help people to get their claims. But what he found out that the deceased, they did not have sufficient sum insured to continue the life of their families. Yeah, so it's like a double tragedy. So one, they lost their loved ones. Second, they do not have enough money to continue their lives. So the lesson learned, we thought that employees who work in one of the prestigious trade centers in the world, they are financial savvy. But actually financial literacy is everybody's problem. Okay, so just a definition, I'm gonna skip this. So this is also the information that already shared by Yuda. As you can see that only 35% population who has bank accounts, 27% having the life insurance. I just want to share it to you because this information is aligned with the data that found by OJK. This is the survey done by OJK. So in here we can see that financial inclusion is 76 something and financial literacy is 38 something. So it shows that actually Indonesian people commonly, they do not understand the product that they bought, right? And also the big gap, it's no surprise if we see cases where people were fooled by fraudulent investments, right? Fabricated business, so it's no surprise. So it's a homework because we know that financial literacy is very important to protect our customers, to increase the financial inclusion. So still from the same survey, so how is insurance literacy doing? Insurance literacy index is still below banking, but above the average of the rest of the financial services. But of course, there's still a room for improvement, right? And also, still the same survey, we see that people nowadays, they're more familiar with BPJS Health SME loan, and we see from this data that insurance already dragged out from the top 5 financial services that they highly understood. So it's a homework as well for us. So, next. Just want to share to you this financial inclusion and financial literacy in Manulife has been our laser focus, because we do believe, we understand that this is very important, this is our purpose and also our responsibilities to create a better world. So this financial literacy and financial inclusion is built above our mission, decision made easier, lives made better. Okay, so you know, one of the ways to boost financial inclusion and also financial literacy is through change. But we know change is not easy, right? That's why I put these quotes from Dalai Lama, because it resonates with my belief. Great visions, excellent ideas will be useless without actions. We have to do something. That's why in Manulife, we do something. We create a very easy products. We call Me Actions. It's a very simple endowment products. It's intended for the new agents to grab the first-time buyers. So it's time for the new customers to know about insurance products, because we know that insurance products is also complex. That's why we provide these simple products. Okay, this is just the sample, the way we communicate these simple products to our customers and also to our agents. Oh, sorry. Okay, so in terms of digital, of course, digital is also very important to boost financial inclusion and also financial literacy. That's why in Manulife, we also committed to build our digital capabilities. These are 2 principles of the way we build our digital capabilities: easy, simple, and convenient, best customer and distributor experience. This is the one-page summary of our digital capabilities, because we want to be present in every customer's journey. We have these 4 touch points: buy, manage and review, claim and health, support and services. I just want to, in one of these touch points, I just want to emphasize the claim and health. You know, in claim and health, we want to give a best experience for our customers in their needy moment, in their crucial time. That's why we want to give them also easy access when they make a claim. So next bit is our financial literacy program. As you all know, this is our continuous effort, and we have done this even before the OJK regulation was issued, right? We partner with Metro TV. We have this financial show in television. Now we move to fully digital because the change of the customer behavior. We also have a seminar in our digital platform. Okay, so this is the data that we got from survey that done by Kominfo and also Kata Data. So in here it reveals that the digital literacy index of 2021 is 3.49. It's slightly higher compared to the 2020 digital literacy index, which was 3.46. But from this information, the one that I concern is digital safety, right? It's still low compared to the others. I think digital literacy is equally important with financial literacy. If we want to boost financial inclusion, if we want to protect more customers. So it leads me to this slide. So Bapak Ibu, digital financial also has flip side, right? It also has risks that we have to manage. For instance, that the customers probably lack of understanding of their products. That's why we have to equip our agents or whomever selling the products with proper training, so they can explain the products in high transparency and also need-based selling. So I think we have to balance with financial inclusion, financial literacy with customer protection as well. Let's not forget about customer protection. Okay, this is my last slide. So as promised, so this is the survey that done by us to about 500 respondents in Jakarta, Surabaya, Medan. And this is the result. 24% said they do not know. 26% said less than 3 months. So these 50% respondents might have financial problems. So, Bapak Ibu, it's quite concerning because these people, they are not living in rural areas. They live in these 3 big cities. And also profile more or less same with us. High education, have easy access to credible information. They are coming from affluent to middle up population. So same of us. So Bapak Ibu, my last comment. So financial literacy is a real issue. So we have to, business leaders, all of us here, we have to do something. Thank you.
Thank you, Apriliani. It was a very interesting highlight in how, especially in Manulife Indonesia, been proactively improving customer experience, increasing financial literacy through digital activities. Of course, some key highlights that agreed and emphasized how Indonesia really have a huge gap in financial literacy, especially thinking on the importance, the role of insurance or life insurance itself as part of their planning. This is a very huge problem for all of us. Well, thank you that we are all here and we can discuss more after the last session that I'm going to invite third panelist, which is Connor Donaldson, CEO Global Asia Insurance Partnership, GAIP. A short bio about him is he holds a graduate degree from University of Victoria, Canada, and have years of experiences in intergovernmental relations, trade policy and financial sector policy in British Columbia, Canada. He is also a CEO of Global Asia Insurance Partnership. Ladies and gentlemen, please give a warm welcome to Connor Donaldson. And he's also, putting off his jacket, so he's ready to go to war. All right.
All right, is that better? Perfect. So I realized one thing when I saw that photo up there. I need a new headshot because clearly that was taken during COVID, where I think many of us grew a bit more facial hair because we weren't having as many in-person meetings. We weren't seeing people as much. And so as a result, maybe we let ourselves go a little bit. And we heard all about some of the negative implications of that from a health perspective on the panel before this. But I think it's also just important to recognize that it is so wonderful to actually have the opportunity to come together in groups, face-to-face again. And I'm very thankful for our hosts to have the opportunity to be here. Bali is a beautiful place. When I told my kids that I was coming here for a conference, they rolled their eyes. They said, okay, sure, conference, yeah. I said, it is a conference, a very important one, where we can talk about insurance. So I just want to start. I know I'm already a minute in, but I want to get a show of hands. How many people in this room have actually experienced a significant loss that was uninsured? Huh. Oh, Yoshi, I don't think you should put your hand down. Okay, but it's interesting because I'm going to show some data points in my presentation that demonstrate that actually insurance penetration rates, particularly in Asia, are abysmally low. And yet for us to be here in a room today and very few people to have experienced a significant loss that was uninsured is actually quite remarkable. But I think it speaks to one of the big challenges that we face in the area of financial inclusion, which is awareness about insurance. because everybody in this room, I hope, is quite aware about what insurance is and what it does. So first, let me take a moment just to introduce the Global Asia Insurance Partnership. Now, I know Yoshi-san, my board chair and good friend, introduced us earlier today during his keynote, but I wanted to take the opportunity just to maybe elaborate a little bit further. So the Global Asia Insurance Partnership is a tripartite partnership in the insurance sector, supervisors across the Asia Pacific, and academia. And what we're trying to do is look at the future risks and challenges facing the sector and the development needs, and how can we, as a multi-stakeholder platform, help to address those. So this is a list of our partners, who's involved, who's trying to this initiative. Hopefully people have the opportunity to look at the slides afterwards, because I'm going to move very quickly. But our vision is essentially to be the leading global center of excellence in insurance and risk management with a focus on Asia. And our mission is to empower the insurance industry and regional policymakers to address both existing and new protection gaps within the region. So the protection gap, quite simple. It's the difference between insured and uninsured. And for me, as a Canadian, I grew up in Vancouver. And Vancouver is a beautiful city. I'm not sure how many people have been there, but I encourage you to. It's lovely. But actually, in December of last year, it was a bit of a nightmare. And the reason that it was a nightmare was because there was a horrible set of weather-related events that destroyed transportation linkages between Vancouver and the rest of Canada, flooded significant parts of the province, and fundamentally disrupted people's lives on both an economic and a social basis. And so, in a place, developed, mature insurance markets, one of the most striking statistics coming out of those floods was that uninsured losses were about 14 times higher than insured losses, which is scary when you think about it, because this is not a market where insurance faces that awareness problem that I tried to point out earlier. This is a market where people buy insurance. They actually go out and look for it, and yet we still see such a significant gap between insured and uninsured losses. And the worst part is that it's actually getting worse. Uninsured losses as a result of weather-related catastrophes in Canada, but I suspect that this holds true globally, are increasing. And we see it year after year, disaster after disaster. Now, if we look at the protection gap, the compound annual growth rate is about 5%. It's higher within the Asia Pacific, and I think there's probably a variety of factors that contribute to that. One of the most important being the significant economic development that's been taking place, particularly within emerging Asia. Now, bringing more insurance to people is critically important if we're going to actually be able to lock in the gains that we've seen in terms of economic development over the last few decades. And I think it's critically important when we think about the evolving risk landscape that we do more to actually be able to support individuals in accessing appropriate insurance coverage. And I'll come back to this term appropriate in a moment, but just to say, it's not so simple as providing a product, but it has to be a product that actually fits the needs and is price appropriate for the consumers who need it. Now, there's a variety of different challenges, and I know we pointed out, unfortunately, there's not anybody representing the regulatory community from Indonesia in the room right now, but the regulator has a critical role to play in terms of supporting financial inclusion. Developing an enabling framework that supports insurers to be able to provide products that are reasonably priced is something that the regulator has a lot of influence over. Secondly, the industry, of course, needs to see this as an opportunity, and not just an altruistic opportunity, but an actual business opportunity. There has to be a profit motivation in being able to design and bring these products to populations, underserved segments that need it. There is also an important role that policymakers can play. And policymakers, of course, insofar as being able to build an enabling policy environment, but I think also recognizing the important role that insurance can play in addressing other social policy objectives. Now, digital innovation plays a critical role. And it's probably one of the most meaningful ways in which we can address some of the core challenges related to cost and distribution for insurance products to underserved segments of the population. But it's also something where more needs to be done to ensure that the channel is reliable, that people's as consumers are well protected, and that there's sufficient access on an ongoing and stable basis. So protection gap, there's a couple of data points. I've included these slides really as an important message about some of the, what I think is quite illustrative information about the significance of the protection gap, the breadth of the protection gap on a horizontal basis, but also what I think is actually also a positive story, which is that despite the fact that insurance penetration rates are still very low, we've actually seen a significant rise in financial inclusion across the region as it relates to deposit accounts, essentially, payment accounts. There has been a lot of progress, and there has been a lot of development. So I think it's very positive, and I think it's something that we need to actually take pride in, and we can learn a little bit from, in terms of thinking about how can we actually use some of the tools that have been so effective in increasing the number of deposit accounts available for individuals, payment accounts for individuals, and actually think about how this can teach us lessons about what insurance products we want to bring and how best to be able to distribute them. I'm recognizing that I'm out of time, but hopefully
Go ahead.
my moderator is going to give me the deference to finish off. But I just wanted to really end on what I think is the ultimate message that I want to deliver. And that is that when we think about addressing financial inclusion, we have to think about it from a multi-stakeholder perspective. This isn't a challenge solely for the insurance sector to solve. This isn't an issue solely for the regulator to solve. And this isn't an issue solely for policymakers to solve. This is an issue that requires us to work collaboratively together to be able to develop innovative solutions and innovative approaches that are going to help us. At GIP, we want to play our part by looking at the different vulnerabilities that exist for certain risks within the region. And we have one project looking at sea level increases, the extent to which sea level increases are going to increase vulnerabilities within urban centers in Southeast Asia and South Asia, and what can the insurance sector do in terms of risk management products, and other services to help address those vulnerabilities. We're also looking at COVID as we transition from pandemic to endemic, and trying to get a clearer picture of where are those mortality, but also morbidity protection gaps, so that we can work to hopefully support the industry, support regulators, support policymakers to actually be able to help close or narrow, or at least bend down the curve, which I think is one of the most important things. So I'll stop there, and I just wanted to say a big thank you again for the extra time, but also a big thank you again to the hosts for organizing this. It's a real pleasure to be here. Thank you.
All right, thank you, Connor. So again, I would love to have this session a little bit different than the previous sessions. Could you please bring up Connor's slides again? I think I'm not quite sure whether I'm seeing it wrong or right. Could you please bring the slides back again to the screen? Connor's slides. Hello, guys. I'm supposed to be there. I'm supposed to lead them. All right, okay. Can you go to the founding partners? Okay, go up, 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 up. Go up, 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 up. Go. Up. Okay, stop. There. I said to Connor, am I saying it wrong? Why isn't there Indonesia there? Regulators as the founding partners. Why isn't there Indonesia? I said to Connor, why? Connor, did you do your job well to you really pushing the Indonesia becoming the founding partner? So again, I'm going to make it a little bit different. I don't want to lead the sessions. I want these sessions to be led by you guys here. It's a very rare opportunity, as mentioned, to speak with Beth from US, to speak with Connor, to speak with Apriliani from Indonesia with different expertise. So that's why I would love all of us, because it's not the protection gap, the low penetration ratio, it's not just, as mentioned, it's not just about our problems, right? It is our problem, but it has to be a collaborative efforts from the regulators, from the policymakers, from us as the private sectors, or industry leaders, and the customers. So now I would love all of you to see all of you raising hands and have more discussion with these three panelists. So can I have, ready? Is there any questions coming out? So let's make these sessions more engaging. Let's have these more sessions, more discussion points. To have more discussion coming from Beth from US, from Global Asia, from Indonesia. So is there anything that would like to raise hands and giving more points to share and thoughts as well? Can I have some hands? All right, okay, we have that gentleman. Okay, great. Please, big warm applause. Okay, say your name and your institutions. Okay, please. Microphones. I previously asked 4 gentlemen to be in the parts in the middle. That's why I'm not there. All right. Okay. Go ahead.
Okay. My name is Jono from FWD. I have a question on the financial literacy done by the industry. So my question is how we provide literacy by the industry, knowing in the past we have a lot of experience in the mis-selling, and when we educate a customer, I see there is a conflicting and a different perception from the customer. Are you selling a product, or are you telling us an education about a product? Thank you.
Okay, I will leave it up, lady. All right.
Thank you, Pak, for the questions. Okay, so mis-selling, very interesting topic, Pak. I think we have been hearing that, and I think it's been the focus of insurance industry now to closely monitor that issues, right? I think the answer to that questions, first, we have to equip our agents with proper training, educations, knowledge. So when they meet with the customers, they can explain that with high transparency. That's very important. And also need best selling, not product push, right? It's really needs best selling. That's very important. That's why I think the financial literacy program actually can be done together, collaborations between us, among the players. We can have, we can install financial educations to the young age since very the beginning, right? We can collaborate with the schools, with the universities to make them more aware about financial literacy since the very beginning. So we have to balance that actions that we have to do, and we also have to pay attention about the customer protection as well. I think that's my comment. Thank you, Pak.
Beth? Thank you.
So one of the things we try to do in the United States, because you're absolutely right, the agent that is selling you the product, the consumer is just like, sure, you're trying to sell me something. So we try to balance that with information from the regulator that we hope will be seen by the consumer as, the regulator they're not selling you anything. But it's certainly up to the consumer, but what happens if you don't have life insurance and you have a family and something tragic occurs? What happens if you have a set amount of money when you retire, but you don't know how to annuitize that money and you go through it too quickly? And now you've lived into your 90s, as many people are going to. So we try to prepare through the NAIC again. Although some states, honestly, mine doesn't, we're too small, but states like California actually develop their own materials. But to try to give non-biased information to consumers, and we struggle every day with how to get that out there. We try a number of different channels, but at least if we're out there and if people look for us and they want non-biased information, in addition to what they're hearing from their agents, it'll be out there.
Great. Connor.
Yeah, it really is an interesting question, and I think some of the research that I've seen has demonstrated one thing as a clear takeaway is that the poor are incredibly aware of the risks that they face, and so when we think about financial inclusion, there is, I think, a great deal of risk awareness that exists within underserved segments of the population. What I think is often missing is awareness of the ways in which the insurance industry and the products and services that insurers provide can help people to better manage these risks. And I think as we see some of the more traditional social informal networks that existed to help people manage.
Breaking up. Again, I'm not there.
I think as we see that there being a great deal of pressure being put on these informal networks that I think used to support communities and families, insurance has to play a more important role. But I think it's really incumbent on the industry, in collaboration with regulators, to be able to actually go through that exercise of not only demonstrating why insurance is important, but also what insurance can help them to do in terms of managing the risks that I'm convinced, and I think the research supports it, that people are incredibly well aware of.
All right, Connor, okay, hold on, Santan. I want to ask one question to Connor, because it's intriguing me. Why Indonesia not in as a founding partners? As a regulator, why?
Yeah, okay, so easy question. Not difficult, and I don't need to watch what I say at all. But I think what happened when GIP was being set up was that there was a great deal of effort put on trying to see which regulators were willing to participate in an internationally oriented, more global regional platform. And I think OJK at the time that this was being conceived was very much focused more domestically, and there was much more limited international engagement. Now I'm optimistic, based on conversations that my chairman has had, based on conversations that I've had, that we will hopefully be able to draw OJK in, which I think would be a very good thing for us at GIP, but I hope also to bring benefits then back to OJK and hopefully to be able to support and benefit the Indonesian market as well.
Pak Budi, the jobs to influence OJK to participate in the global actions more. All right, Pak Saintan, your questions. Hello, mics. Pak Saintan in the front. Okay.
It's Michael. Yeah. Thank you. Yuda's been waiting to ask you that question since yesterday, right? All night yesterday he was talking about it. I just wanted to follow up on the points you were making about lower income, the poor segment, aware about the risks that they face. Being aware about it and being able to afford products given the limited disposable income, that's one question. Is there really an ability to afford it, and is that an issue that we just kind of sweep under the carpet when we talk about financial inclusion? can people really afford it? A lot of times we focus on the cost of distribution. So through digital, you take the intermediary out of it, it brings the cost of distribution down, which brings the price down. But if I go back to the education part that's required, that's where an advisor, an agent, actually makes a difference in helping someone understand their needs. Let's be honest, nobody wakes up on a weekend and say, let's put the kids in the car and go buy some insurance, right? So maybe to yourself, Connor, and to the rest of the panel, given those issues, where do you see us striking a balance?
All right, Connor first.
So I think you're absolutely right. When we think about actually being able to address the affordability question, there's a lot of embedded costs in the design, development, and distribution of insurance products. Distribution is, I think, a significant part of that, but I wouldn't want to also not draw attention to what I think are also additional costs that are built into the system. Many of the large insurers, of course, they have a cost basis. This is something that we're all aware of. Margins are generally quite tight in the insurance industry. I think we also need to be very much aware of the regulatory burden. This is something that creates operational costs for the insurance industry. And I think all of these things, they create a barrier of entry for poor parts of the market to be able to purchase insurance. Now, if we want to be able to address affordability, I think we have to be thinking about it from an entire value chain perspective. And I think we have to actually go through that process of thinking about the design and the coverage and what are some of the ways that we might be able to simplify so that we can actually get into the hands of people who need them, products that make sense for them at a price point that they can afford. Now, public sector may have a role in this. There may need to be community-based, individual-based, business-based subsidies that can support people to be able to purchase insurance. Because it does make, from a social policy perspective and an economic policy perspective, a big difference for different levels of government when they respond to a catastrophe. If people have insurance and they're able to access insurance, it makes a big difference. I would also just highlight that one of the things that I've had the benefit of seeing in a number of other emerging markets outside of Asia, but I think is instructive, is that there was a democratization of the distribution channels. And so there was other elements of the community, of the sort of network within these communities that were able to actually learn about insurance products and then help to distribute those insurance products. Because you're absolutely right. People need to be sort of brought along in the journey. No one gets up and drives out. Despite my best efforts with my kids, I know that probably they're not going to do that with their families, and I didn't do it with mine, and my parents didn't do it with me. But there is a role, I think, in terms of enabling other members of society, other parts of the community to be able to act and support distribution of insurance products. And of course, you have to be dealing with the licensing and making sure that people have the skills and everything else. But there are ways that you can I would say, not remove, but maybe just adjust some of those barriers of entries for different segments to come into the distribution channel.
So more social works than Pasaintan. That's probably the ideas. All right, Beth, you would like to have comments?
Sure. So I think the distribution channel issue is it just needs to exist on a number of different levels. And I do agree with you, Connor, simplifying the regulatory process. Over the last 20 years in the US, we've gone to very extreme measures to do so. It used to be extremely difficult. Well, I shouldn't say extremely difficult, but a long process to get an insurance license. It was all paper-based. You'd send in applications, you'd wait 3 months. We've developed a national system where you get an electronic license for your home state and you can get licensed in any other state automatically. Even with that, we've still seen, and we've been hearing this from life insurers really for like the last decade, it's still tough to get kids in, I shouldn't say kids, but young people in to insurance. Not nobody, but I don't know a lot of people that were in college and said, boy, I really want to go into insurance. Almost everyone. I was once on a panel where they asked us how we fell into insurance, because it's just not something that's discussed. And I honestly think a lot of that is financial literacy. It's not really understanding what the insurance industry is. But I think for the future, we have to look at multiple channels. There are people that will want the financial advisor. There are people that absolutely do not want the financial advisor. They want to apply on their phone and hear back right away. And then there's people somewhere in the middle that want a little bit. So as regulators, we really feel that it's our job to provide the minimum necessary regulation, but not over-regulate it so that we interfere with the sales process.
April, you would like to have some comments?
Okay, I just want to echo again about the financial literacy. We know that financial literacy is a long-term process, so it needs a collaborations among all the stakeholders. The government, for instance, they have to create a fair and fair regulations that benefit all stakeholders. They have to build digital infrastructure so we can reach rural areas. And players, we have to create, like the one that Connor explained, a product which is afford to low segment. So I think it needs a collaboration among us. It's also it's a funny story that you said about that your kids do not want to go during weekend to buy insurance. But I think we as parents, we can also, as their financial teachers, right? They can have that financial literacy since the beginning from their home.
So it's very interesting. So I think it's almost the same comments that collaborative works among stakeholders. Is it possible if I ask that we have about 60 Pak Butam, 60 life insurance, right? Can we have collaborative like joint products? So like just an idea. So is it common in US or like a joint products from 60 insurance companies have one product but shared premium, shared risk across the Indonesian? Is it possible? Is it? I don't. No, we're competing each other. No way. I'm competing with them. No, I'm not quite sure. No, probably it's just a question because it's 60 companies, right? If we work one by one, probably the impact will not be that big. But what if we work it as a collaborative actions? Is that common? Probably you see that in most of the APA countries. I don't know. I know. No. I'm competing with them. No, cannot. Is it common to have that collaborative actions? Probably, Connor, in APAC markets, US. Is it common?
It's not really common to sell
it's
a
not
product.
really common.
But I can say that we do have trade associations in the United States that do some of the stuff we're talking about, like getting financial literacy out, getting people to understand the products. And those represent competitors, right? Because every competitor wants the average person to know what their products are generally, and then they can go and sell their own product. But we don't see people doing that in the US, multiple companies. They really consider themselves to be competitors. But the reach out, the educating the public can be done by multiple companies.
All right, educating the public, but not creating the products. All right, Connor?
Yeah, I think you see, I guess probably the best example is in MTPL, where you see with motor products that it's a mandatory coverage and people are competing across that business stream for the same sort of product and the same premium dollar, but it's not like they've developed the products jointly. I think that's probably the closest thing that we see within the US, and we see it within Canada, where it's mandatory. The industry has to design products that meet certain requirements. They compete across it, but I wouldn't ever call those joint or collaborative products.
So if I could just amend my answer briefly. This doesn't yet exist in the United States, but we're seeing insurers pull back on products. So in other words, what Connor mentioned about CAT products, there's larger deductibles. There's what we just experienced, business interruption policies don't cover pandemics or viruses. I can see a future in which you might have a pandemic, a parametric product that is partnered with a traditional product. So people are insuring that very large deductible because it's a hurricane percentage deductible through a different company. So you're spreading the risk that way. It doesn't quite exist now, but I'd love to see a future in which that existed.
Yeah.
April, do you have comments on that one? Would you like to have products with Prudential and Manulife? Prudential and AIA?
Yeah, it's not yet in Indonesia, right? Products like that. But what I can say here, probably we can start collaborating in promoting and educating about financial literacy and also financial educations. We can come together to school or even other financial literacy programs. Yeah.
All right, am I too sensitive? All right. Okay, cool. All right, probably one more questions. Anybody? Anybody? One more questions? Who? Oh, okay, come. Who? Oh, sorry, you want to ask questions? Sorry, from the guest first. Home stay. Okay.
Thank you very much, everyone. Thanks to your presentation and good discussion, I now fully understand the potential benefit of the digitalization and the use of tech to address issues like low penetration and to address protection gaps. I fully understand, thank you very much. But I think the issue of financial inclusion is not necessarily the issue of only in insurance. For instance, other parts of the financial industry, such as banks and securities companies, face the similar issues. So now I want to understand fully more what are the specific challenges for the use of digital technique for the financial inclusion. So for instance, in the banking domain, we frequently listen to the successful stories in Asia and Africa. For instance, even if you don't have easy access to bank branches, as long as you have one mobile phone, you can easily open the bank account. So the financial inclusion dramatically increased. Also, another story is thanks to the use of AI, artificial intelligence, credit scoring has become very accurate and easy and less costly. But to the extent I see the low penetration of insurance in Asia, so far I think that the use of technology has not been successful so far. So what are the specific difficulties in the use of technology to address our challenges such as low penetration and protection gap? This is my question.
All right, Connor?
Very good question, AG. It's for me, it's clear, as you point out, that we've seen uneven developments in terms of financial inclusion across the financial sector. There has been, I think, much greater emphasis placed on giving people access to bank accounts. A very simple measure, absolutely, but one that I think there's been a lot of success in terms of increasing the number of accounts. Two, access to credit. This is something that I think, frankly, the selling proposition is a lot easier. Giving people money versus asking people to pay you money, it's a lot easier. And I think as a result, people have been able to see how access to microcredit can help them to address their individual needs better than a microinsurance provider saying, hey, give me money, and if something bad happens to you, then I'm going to give you money. And it's just the simple value proposition, and I think it's probably the same in developed markets versus developing markets, where you see people much more willing to do things that give them money than to do things that require them to pay money. It's a very simple way of looking at it, but I think just full deference to the time, it is just a harder sell, and we have to work that much harder. We actually, I think, have a greater opportunity at this moment, probably greater than we've ever had before, where many of the conversations that are taking place at the global level that are occupying discussion space within the news media, both the traditional as well as social media, these are things for the insurance sector, climate change, social inclusion, diversity and inclusion. These are things for the insurance sector, an incredibly powerful story to tell, and I think we can leverage off the ways in which the insurance sector can contribute to addressing some of these issues to actually hopefully draw more people in and look at ways that they can access appropriate insurance coverage and why that's so important.
Beth, you would like to add some comments, probably just short comments?
Yeah,
Because
I
in
think
concern of
Connor's
time.
right. Yeah, it's much easier to give people money than take it. That's but
Exactly.
So why is there such penetration of homeowners insurance in the United States? Because mortgagors require it. So with microloans, is there a way to partner so that the people getting money are also getting the insurance coverage, which is so critical for their success, but they might not look at it that way. They might look at it, oh, I got the loan, I got a small business, but maybe partnering with the lender is one way to address it. But there's no question, it is harder to sell insurance than to give people money.
Okay, I think quick comment, if we zoom in into Indonesia, I think, I'm sorry, I have to say that why digital inclusion is still low, probably because of the regulation itself. We see that regulation is not really supporting the development of digital inclusion, particularly in insurance sector. That's first thing. Second, because of course the investment that we have to put for digital financial services. And I think the three is because of the law of the digital literacy that I share as well. I think as much as we want to develop the financial inclusion, digital literacy is also very important because it's gonna have, we're gonna protect the customers as well, and we're gonna have a sustained financial industry. Thank you.
Thank you. I think one conclusion from me is that we should ask OJK to be here all the time. And how can we do that? Not just in the beginning, in the opening, and they... I think that will be one conclusion. All right, ladies and gentlemen, I think this has come to an end on the first day session. Please give a big round of applause for all of us, for the panelists. Consumers have changed. Digitalizations, technology adaptations have taken a new role in boosting financial literacy and inclusions. Collaborative efforts from all stakeholders, government, regulators, policymakers, private sectors are critical in boosting financial literacy and inclusions. Of course, our wish all together that these 4 sessions will give us a new draw for new kick actions and in the future as well, since we are all leaders here, and more collaborative actions happening so we can improve the protection gap and protecting more Indonesians and improve their welfare through financial inclusions. My name is Yuda Wirawan, thanking all the panelists, Elizabeth Kelleher-Dwyer, April Siregar, and Connor Donaldson. Thank you and wishing you all a great day in Bali. See you again in more conferences in the future.
All panelists are requested to remain on stage to receive token of appreciation. We would like to invite Mr. Edi Tuhirman from AAJI Board to come on stage and present the token of appreciation. Ladies and gentlemen, that concludes today's event for Insurance Forum 2022. See you tomorrow and thank you. This event is sponsored by Platinum Sponsors, PT AIA Financial, PT Prudential Life Assurance, PT Asuransi Allianz Life Indonesia, PT Asuransi Jiwa Manulife Indonesia. Silver Sponsors, PT Asuransi BRI Life, PT Reasuransi Indonesia Utama Persero. Bronze Sponsors, PT Asuransi Jiwa in Health Indonesia, PT Great Eastern Life Indonesia, PT Administrasi Medika Admedika, and our media partner, Kompas Daily Newspaper. This event is sponsored by Platinum Sponsors, PT AIA, PT Prudential Life Assurance, PT Asuransi Allianz Life Indonesia, PT Asuransi Jiwa Manulife Indonesia. Silver Sponsors, PT Asuransi BRI Life, PT Reasuransi Indonesia Utama Persero. Bronze Sponsors, PT Asuransi Jiwa in Health Indonesia.